I think I got like 15 to 20 ARM testing like a month or so. But overall, like pretty happy with this. We're seeing about a 58% win rates using a 1.75R. Like, what's up, everyone? Thanks for joining today. I'm excited to share with you this ICT Turtle Soup Strategy that I was able to research. For those of you that are new to these, you'll see me on Discord as Ox Fibonacci. I've been backtesting with FVG Replay about 2 years now. I've recorded over 5,000 trades, backtesting all kinds of different strategies, and it's helped me get funded, get a few payouts. And so I'm excited to share with you this Turtle Soup Strategy. It's not ICT's original name. Actually, another hedge fund investor, Linda Bradford-Rashke, came up with the name originally, and then ICT kind of took it and made it his own with an intraday version that we're going to be going over today. So there's a lot to it. I've looked through a lot of his videos, and at times it's kind of hard to see exactly why he's entering where he is. So I've tried to really break it down into like more mechanical, digestible, and simplified variation for you guys using the same concept that he talks about. But high level, before we get into the education, there's kind of two main things we're looking for, either like an external range sweep and a reversal, or an internal kind of rebalance into a fair value gap with a sweep followed by continuation. So those are kind of the two things we're mainly going to be looking for. And we'll go over a few educational components real quick. So most of you guys should be familiar with fair value gaps at this point. Basically, a 3-candle pattern with non-overlapping wicks on either side. We'll be using this for one of the entry models. The change in state of delivery, or CISD, as you'll see it often, is basically a closure past the body of the recent price leg. So you can see here, these last kind of 3 red candles of the move, once we get a price closing kind of above the body of this candle, that's a bullish change in state. And similarly, these last kind of 3 green candles is a bearish change in state. So it's a little earlier than breakout structure or market structure that requires like a closure past the high or low. In this case, we're really just looking at the bodies, and that's what we're going to be using today. Premium and discount is helpful to see if prices kind of rebalanced or not. For those of you that haven't seen the Trader Kane video we did last week, he used a lot of that to determine like directional bias, and so we can use that a little bit today. A couple of things we haven't really talked about on other videos. So new week opening gaps, or NWOG, as you'll see people refer, is basically like a gap in price that happens between Friday's close and Sunday's opening. So there's often a gap up in pretty much every asset during this period. And these can serve both as draws on liquidity, kind of imbalances that need to be refilled, or after they've been filled, they can just act as kind of support and resistance. The last thing we'll be using is time-based liquidity. So in terms of, what liquidity levels to mark out, in terms of identifying those reversals, from a lot of my own testing and just generally, these time-based liquidity levels are going to have a lot more strength to them than just like any internal high or low. So this is going to be your session highs and lows, the previous day's highs and lows. You can even see previous week highs and lows, basically time-based liquidity levels. You'll see me kind of call them PDH, PDL for the previous day higher, previous day low, or just more generally buy-side liquidity, sell-side liquidity. So those are kind of the core educational concepts. And then before we get too far into it, I'm obviously going to go over kind of how I have everything set up on the chart for you guys when we get into FVG Replay. But I'll be testing this in the 5-minute time frame using NQ, predominantly just like trying to focus on entries in New York AM. As I've done testing, it seems like kind of later in the day isn't as good for this. But this is a pretty flexible model. You could definitely test it with other assets or other sessions. If you're a London session trader, you could test the same model using kind of Asia session highs and lows. That's kind of what the Judas swing model is made from. But the first thing I really want to go over, and I have a little quiz for you guys that we'll do in a second here, is I want to try and see if we can identify some sort of bias, like where is the next likely liquidity target based on different elements we have in time. And this is going to take some practice, but if you can use those time-based liquidity levels and the new week opening gaps and premium discount to see like does price need to rebalance or not, it's going to give you a good framework to identify bias. And so to help kind of reinforce this, I actually made a little quiz for you guys. So let me know in the chat, based on kind of this chart I have, this is after New York market opened. Do you expect kind of breakout continuation to the upside or reversal to the downside? Let me know in the chat. We'll see what you guys think. So I got a couple people saying reversal or downside. What else do you guys think? Cool. So it seems like most of you think to the downside is correct, and you're right. There's multiple confluences for potential bias reversal in this case. Not only have we set the time-based liquidity of London and Asia highs, we've also tapped into this new week opening gap, which I said can serve as kind of support and resistance. So could have definitely looked for shorts on this day, either kind of with stop limits or, testing into fair value gaps. So that's good. Most of you got that one right. This one's a little harder. So based on the chart here, what do you think would happen after market open? Would we expect, price to continue lower or price to continue higher? Few people saying upside, few people saying downside. Okay, this one's a little harder. All right, so this one is a little trickier because using the same logic that we just talked about above, technically we have just swept London's high. And so you could potentially say, we're expecting to revert to the downside now. However, we've already taken both Asia lows and previous day lows. So that liquidity has already been taken. And we had a very impulsive move to the downside the previous day. So this needs to rebalance. I really encourage you guys, if you haven't watched Trader Kane's video, regardless if you want to trade his model or not, the way he uses premium and discount to identify bias is super, super helpful. And it's a great way to look at things, but especially after a really big impulsive move. Markets don't just go straight up and straight down for forever. So oftentimes you'll need to rebalance, and that's exactly what we saw in this case. From the high to the low of that mood, we eventually needed to kind of rebalance it to the upside. So looking for longs on this day kind of would have been the move. Last one for you. What would you do in this case? Would you expect kind of a breakout and continuation to the upside or a reversal to the downside? Let me know in the chat. Okay, probably about 60% saying downside. A few of you think upside. Okay. So yeah, the few that said upside, it's probably because of this new week opening gap. You expect price to, move away from it, like we saw at kind of the low of London, but this gap hasn't been filled yet. You can see over here, there's still basically a space in between Friday's close and Sunday's open that has not yet been filled. So this is where it acts almost more as a draw on liquidity until it gets filled. And as you can see here, we swept London highs even once again after New York opened, and then we came and kind of filled that gap and then eventually kind of moved away from it. But heading into open, the bias would have probably been more likely that we would come to the downside and fill this for those reasons. So you guys did pretty good, but hopefully that gives a little bit of a framework on how to potentially use bias. We'll be using a couple different entry models, like I said. The first one is kind of the external turtle soups, where we sweep those session highs, previous day highs, etc., and we're looking for some sort of reversal. And I was playing around with 1.5R, 2R. I think I might just go for a fixed 1.5R for these reversals, looking at the risk reward simulator for my testing. That's something we can definitely refine. But after we get this sweep, we look for that change in state of delivery. We want to enter on a retest, and then we're just looking to catch a little bit of a move, kind of moving away from that time-based liquidity sweep. The second one are those internal sweeps. So maybe pre-market, it had already kind of swept. That time-based liquidity was already kind of starting on its way, and you could kind of set your bias. Okay, I think we're heading to these next internal highs and maybe session highs. That's your bias. You can still hop in that move if you can find local lows that might be swept into a fair value gap and look for continuation. And so it's simply going to be a limit order on the retest of the fair value gap, stop at the low of the candle that made the fair value gap. And I think I was going for a fixed 2R. Again, this is something we can refine with the risk reward simulator. Same thing for a short. It would be a limit order on the fair value gap retest, stop at the high of the candle that made the fair value gap. Looking for that fixed 2R, you can refine with the risk reward simulator, not using any trade management. And then we have a few rules before I go over some more examples. So I think this rule is pretty good for any model if you guys are trying to save yourself. So I think after you get a win, it's a great time to just close the charts and be done for the day, instead of being greedy and giving back your gains. Similarly, to avoid tilting and just having too many losses, maybe 2 attempts max is a good rule for this. Also, since this has an element of directional bias, if you're not really sure where price is headed, it's totally fine to just not trade that day. You're definitely going to have days that are more clear than others, and so it's totally fine if you're really not sure where it's going to go. Instead of just kind of flipping a coin, it's maybe better to just wait when it's more easily identifiable, and that's something you can kind of play around with. But if you don't know, it's totally fine to just go to the next day. With the change in state delivery specifically, you're going to want to ignore doji candles or small-bodied indecisive candles, because you really want to it's basically confirming that the order flow has started to shift. And so if you're just looking for a little closure below a small-bodied candle, that doesn't really tell you that the buyers are stepping in, or vice versa if it's to the downside. So you want to stick to the larger bodied candles for those change in states, and we'll look at a couple examples as we're backtesting it. Since both the entries are limit order based, if you get front ran a little bit, doesn't quite hit your entry, and then goes through take profit, just cancel your order, because it's going to be lower probability on a subsequent retest. If there's multiple fair value gaps in a row, maybe there's 2 or 3 candles in a row that have fair value gaps, you're trying to find that continuation. It's probably going to be best to just use the first one, unless you're really confident, like right after market open, it's just going to keep continuing on the next one. And then lastly, you don't want to take continuations to near the time-based liquidity. So say you're looking for a time-based liquidity trade into a daily high or a session high, but the price is already kind of pretty close to it, and you would have to like go beyond it to get your take profit. It's going to be lower probability, obviously, because that's kind of where the reversals are expected to happen. So you maybe just wait for the reversal in that case instead of like trying to chase a trade right into the liquidity level. So we'll go over a couple examples. Obviously, I usually have these checklists for you. It's pretty simple. Align your bias with the reversals and the CISD retest, or identify a continuation with a fair value gap retest. And then a couple examples here. So we swept London lows here after market opened, had a nice change of state of delivery with a candle closing above this body right here. Limit order on a retest of that change of state. Just use the low. You could play around with slightly tighter stop losses if you wanted, but right now I've just been using the low. And then I think in this example I was going for like the London high for like 1.7R or something, but I think that I'm probably just going to do like a fixed 1.5R based on my testing so far in the risk reward simulator. So similarly for a continuation trade, we had, I think this is actually one of the ones that tapped into the NWOG too. We swept London highs. We had a really strong reaction off the reversal. Probably unlikely to come back and test kind of these earlier levels, but even down here we had a change in state back down here that overlapped with this fair value gap. So we could use kind of this candle, these 3 candles right here, this fair value gap, entry on a retest of it, stop at the high of the candle that made the fair value gap, and target our fixed 2R, which is a little bit below London lows. So we'll go into FX replay now and do some backtesting. So somebody in the chat give me like a random date in the last like 3 years. I want to choose like a totally random point in time. All right, March 27th, 2022. So 2022, March. Okay, that was a Sunday, that's fine. All right, I'll show you guys what I have on the chart here, and then we'll kind of start doing some testing. So I have 4 different indicators on here. I have the fair value gap indicator by FX Replay, which I usually uncheck the mitigate boxes so I can just see all of them. I think it makes it a little easier. I have the session indicator New York by FX Replay that I have basically 3 a.m. to 8 a.m. New York time for London session. I also have the kind of previous day highs shown. I only am showing London session. And then I use the session indicator, not the New York one, for Asia session because it doesn't have a daylight savings time. So I use basically 0 to 6 UTC, which lines up with their 9 a.m. to 3 p.m. Tokyo session. So I use like each indicator for New York and London session. I'll use the New York indicator. Asia session, I'll use the other one that doesn't have any like daylight savings going on. And then lastly, there's a silver bullet indicator. I don't know, you guys might not have used it very often, but you can come in here. Basically turn everything else off. You can just show these new week opening gaps. You can put 2, you can put 5. Maybe I'll just do like 2. The last 2, you can do more if you want, but you can change it so you have these new week opening gaps shown on the chart as well. And then yeah, we'll kind of go into the next session. So if you guys are new to FX Replay, you can just put like 9:30 for the New York session for that. So coming to this day, we're right on top of this new week opening gap right now. So I don't really know for sure what I want to do. I'd like to see maybe a sweep of some sort of session highs or lows, and then we can look for a reversal. So let's see if we can kind of wait a little bit. Nice. We swept a previous day high over here. So we got 2 time-based liquidity sweeps, both London high right here and previous day high. So we can look for a change in state of delivery for an entry. So I'm looking for a candle closure below the last green candle, which we get right there. So right here we have our change in state of delivery with this candle closing below this kind of candle body low. So I'll do an entry on a retest right there. And again, I'm just going for 1.5R for fixed take profit on this. Not going to get too greedy based on what the risk reward simulator was telling me. And I was using entry trigger 1 for these CISD retests, so we can look at them separately in the analytics. So we'll place that in and see what happens. So we got tagged in, a little bit of drawdown, and nice TP. So our first trade was a win, and I'm just going to stop after 1 trade every day. You could potentially look for more, but that's kind of what I was doing in testing and kind of what I'd encourage you guys to do too. So this next day, we've kind of swept some London session highs. Maybe I'll also look for a reversal to the downside this day. I'm not going to trade right at open, but kind of after open, see if we can get a change in state to the downside, which we get right there. So we've got a change in state right here, kind of same thing as the previous day. Entry on a retest of that change in state of delivery, just targeting a fixed kind of 1.5R right there. Place order, entry trigger 1. Got tagged in, and awesome. Really quick trade. So yeah, you don't have to get super complicated with all sorts of fair value gap, breaker blocks, etc. This model, especially the external turtle soups, is very similar to the unicorn model. So you'll see a lot of overlap with that. But it's similar, and I guess a simpler version of it. You're just looking for those change in state delivery. So same thing. We'll go to the next day. Let's see once my indicators load. And sometimes you have to zoom out a little bit to see the new week opening gaps and the previous day high and low. So it looks like we've swept London low here. And we have some relative equal highs up here. So I'm kind of looking to the upside to start. I don't want to trade like right at open, but okay, we've moved up to the upside pretty good. If we came back and like retested this change in state, I think we'd probably already be at our take profit. So maybe I'll just kind of wait for something else. Yeah, we could have taken this trade. So there was a change in state all the way back here, kind of pre-market, and it would have worked out. But this is kind of the case where it already had gone up over 1.5R before it had kind of made this retest, so it's just a little lower probability. Let's see if we can find anything else. So we've got a London high sweep right here. So this is session time-based liquidity. We could potentially look for a little bit of a pullback now if we get a change in states. Let's see if we get anything right there. So you can see we have a change in state delivery, and these are like pretty large bodied candles, so I'm totally fine, even though it's a single candle, calling this a change in state of delivery. We have a closure below the body of this previous candle. So I'll use a limit order on a retest, go for 1.5R, entry trigger 1. Let's see what we get. Tapped in, awesome. It's really nice when the trades play out that quickly, but it definitely doesn't happen like that every time. Let's go to the next session. So yeah, you could have held this one quite a bit further, but again, I'm just going off the data, and the risk reward simulator says going for like little smaller base hits is probably better with this. So that's just why I've been doing that. So let's see, we have swept London lows real quick. We could potentially come down to these daily lows down here, but overall, I guess yeah. One thing I am noticing now that I started seeing this is we had a pretty big impulsive move here to the upside that has not rebalanced yet. So if I put this, I just have the like parallel channel tool favorited, and so this is basically the midpoints, and I expect price to come and rebalance here at some point. So I'm actually kind of leaning short on this day, even though we've swept London lows right here. I don't want to short like right at these lows, obviously, but I'm kind of expecting price to rebalance. So maybe if we take some sort of sell side liquidity, either these, at least like London high or something, maybe I could look for short. I might just go straight down there and I'll miss the trade. Yeah. So price kind of went right there. I'm totally fine just passing on this. I had the right idea. There just wasn't really an entry model with this, unless you're trading Asia session, obviously. This is, again, for you London traders. You could potentially still trade this. I don't know if NQ is best for London session. The DAX or gold, or for other Forex pairs might be better. But this is kind of the exact same thing. We had a sweep of a session high and a nice reversal. So it also works for other sessions too. So we kind of took out this low, but we also now have a previous day low that we swept. So we could potentially look for a long reversal here if we get a change in states. Let's give that a shot. So right here we have a bullish change in state of delivery. So we can try an entry on the retest, stop at the low, see if we can come back like 1.5R. So entry trigger 1. Got close. Looks like unfortunately probably going to be a loss. Yeah, all good. It went up in our favor a little bit, but unfortunately there was a pretty big displacement to the downside. We almost we flipped London low from support to resistance. So unfortunately got a loss, but that's totally fine. We're still up pretty nicely, and it's already at the end of the day, so there definitely isn't time for another attempt this day. So coming to this session, we've swept London lows, but I can see like some kind of trend line liquidity here from all of these lows. So I'd love to see us sweep like Asia low and maybe this previous day low, and then look for a reversal to the upside. Let's see if we can get that. We haven't swept the low yet. I need to make sure my NWOGs are loading too. Okay. We could potentially come all the way down to this new week opening up as well, but I'll take any change in state if we get it, because we swept the previous day low, and that's kind of that's the first thing. We've taken that sell side liquidity, and we could potentially look for reversal. So we've got a CISD right there, 1.5 hours right there. So entry trigger 1. Okay, this is still valid. It got really close to take profit, but not quite. Might be a loss. Nice. Okay. So this one, like I said in the rules, I've generally been canceling the limit order if it hits take profit before, but this one got really close, but not quite. So we kind of keep it in place and end up working out. So we'll go to the next session. Again, just zooming out so I can see all the information. Now we have, make sure I get the older NWOG too. There you go. All right. So we have previous day high up here. We have a new week opening gap down here. I think like we could either look for a reversal into or kind of a bounce off this new week opening gap targeting the highs, or if we sweep the high, we could look for a reversal. But I don't really have a clear continuation direction yet, so I kind of want to let a little more information. There we go. So now we can look for potential reversals to the downside. And oh man, we're really kind of taking off here. Is there something that needs to be rebalanced? Not really. I think we're kind of just targeting some of these previous session highs. So based on the time-based liquidity, like I guess we can kind of mark out some other potential highs that could form a reversal. So I'll put this as another form of buy-side liquidity. But we're pretty extended here. We should pull back at some points. Let's see if we can get a change in states. No change in state there. Okay, we're not getting any change in state delivery, and just continuing to the upside. Okay, so this is a good example. I'm not taking any trades yet, but I want to show you guys what I mean by like the small bodied candles. So here you can kind of see we're looking for candle closing below like a series of green candles. So we didn't get any here, didn't get any here. If there was a closure below this like kind of doji indecisive candle, I wouldn't consider that a change in state. I think it's better to look at like series of candles or like the larger bodied candles as like more clear changes in state of delivery. So not taking any trades yet. There still hasn't been any, but just showing you guys like I wouldn't consider like these like indecisive candles like by themselves for a change in state. So we still don't have anything. We might just be kind of floating to the upside today. It's already pretty late in the day, and I have noticed like it's better not to take this later in the day, and doesn't really seem like price wants to reverse at these levels. You know, there probably will be at some points, but I might just go to the next day because we're not seeing any reactions to the downside as we expected. Yeah, really big impulsive move. So similar to what we saw before, now that we had that big impulsive move to the upside, I expect like this leg to rebalance at some point. So I'm looking for price to kind of come back to this point. It might not happen today. There's a good chance it happens today, but we might, maybe we take out London's high first. But I'm kind of looking for a continuation to the downside on this specific day. So let's see if we can get any sort of continuation. So we have a fair value gap right here. As you can see, the buyers tried to kind of reverse at London, but it got rejected down. And now we have a fair value gap here. So this is the kind of the second entry trigger that we can take, and the 2R, let's see, it's a little further than the midpoint. I'd feel better if this 2R take profit was kind of right at or closer to this midpoint, but it's in line with the directional bias at least, so I'll give it a shot. Sell limits, I've been using again 2R for this, but maybe we'll find out it's better to use the other. I use entry trigger 2 for these limit order trades. So we got tapped in. Oh my gosh. So this came about as close to our stop loss as possible. Let's see, 101.25, literally like 50 cents within our stop loss. That's the nice thing with futures. You can have some pretty tight stop losses and still have it play out. So yeah, could have held it again a lot further, but had the right idea and caught a nice win. Wow, I didn't even notice. Yeah, so if you zoom out again so you can see the new week opening gaps. There you go. And not only did we kind of rebalance this gap, but then we also kind of came out. Look at that reaction off the new week opening gap. These often, like I said, serve as kind of support and then resistance once they flip. So man, we're really kind of moving to the downside now. And I would say like kind of the flip side is true of what we saw the previous day. Now we need to rebalance this range. So I'm looking today if we can sweep London low, maybe rebalance a little bit to the upside. I won't, hold all the way up here. I'm just trying to catch a little piece of it, but that's kind of my bias for the day. If we can sweep London low and then form and change in states, see if there's any other key kind of liquidity levels. Got to go back a little bit. Looks like there's this guy right here. That could be a kind of previous liquidity level. It's not a time-based level. I think this is just like a Thursday's low of the previous week, but it's kind of the next level that we could look for a reversal after. So see if we can tag that. I want to wait till we tag this liquidity level because it's a core component of the turtle soup. We also have, if you can see, like relative equal lows here. Actually, like exactly the same lows. I usually don't like to trade against like draws on liquidity like from the local price action. So I'd rather see like these relative local lows get swept as well as this kind of higher time frame low. So just being patient. There we go. So we got the change in state, we got the liquidity sweep a little bit. It took a little while for us to get it, and now we can see if we find a change in state of delivery. Again, indecisive candles right here. And now I would say this is like probably as close as we're going to get to a change in state. Maybe we'll use this like low right here. But it might take off without us. So yeah, if we're going for 1.5R, we've already ran up 1.5R without tapping into our take profit. So we might just kind of miss this. It might just kind of take off without us. Yeah, unfortunately, since it's a limit orders, you're going to miss some trades. That's just how it is. But we had the right bias and pretty happy with that. That we stayed out of it until the proper liquidity sweep happened. Oh man, it must have been some like earnings. Yeah, at the end of Q1, there's usually like earnings after New York opens. So coming to this next day, let's see, we still haven't rebalanced this big range. So I think like we could still potentially look for longs. Maybe if we get a sweep of these kind of previous day lows, then we could look for a move to the upside. Again, we kind of have that trend line liquidity here going, where prices kind of flipped on it. So I'm looking for continuation lower and then maybe a reversal off this low. We can kind of look for either one of these. Oh wow, fake out maybe. So I'm still looking for some sort of session, time-based liquidity sweep followed by a reversal. I'm looking generally to the upside though, so we can kind of see what we want to look for. Okay, so London highs got swept here. I definitely don't want a long near session high liquidity. Maybe we can look for that pullback right here. It's a little conflicting. So this is a good day where maybe it's good for us to sit on our hands because there's kind of conflicting things happen. We have this high time frame draw to the upside from these like this big impulsive leg down that has not rebalanced yet, and then we also have kind of this day specifically we've swept this high and maybe would expect a reversal to the downside. So I don't really know which one to take, and this is probably where it's going to be. If you're not sure, it's probably just best to just sit on your hands instead of flipping a coin and not being sure exactly what. Just let it let it play out and try and find another day. So I'll just probably skip this day because I'm not totally sure. It looks like we did get a reversal at that London high and then eventually came to the upside. But again, if you're not sure, it doesn't hurt to just not trade that day, so that you take the trades when you feel more confident in them. So this next day, we have kind of taken London highs and we're displacing pretty hard down to the downside. Looks like we're maybe heading towards these previous day lows. So probably kind of looking for a continuation to the downside this day. Starting to displace pretty hard. I don't know if we can get 2R to that low. 1.2R. Yeah, so this is where I don't really want to short into this low. I do think it's likely to tag and then we can maybe look for the reversal, but I don't want to go like too far beyond it. So actually it's not too far. We can give it a shot with the entry trigger too. Okay, yeah, it didn't tag us in. It looks like there was another candle that made a fair value gap too that we could have used instead, but it's going to be a little lower probability because that stop was like pretty tight. So let's instead now look for a reversal to the upside. Again, we still have this high time frame range that hasn't balanced, so I think it's still valid to look for a reversal, especially after we take this previous day low. So let's see if we can find a change in state after this, which you got right there. So a change in state right there. Entry here. It's going for 1.5R. Entry trigger 1. Nice. Dug into our drawdown a little bit, but ended up being a nice win. All right, so coming to this next day, looks like we have this new week opening gap above, as well as kind of London and Asia highs kind of stacked right on top of each other. So I'm looking for potential reversal to the upside. It's kind of what my game plan is. Let's see what we can get starting into the session. So we got our change of state of delivery right there. Right here, we can use a retest. Stop with a low, target 1.5R. Right there. Entry trigger 1. Save. Okay, fortunately, first trade was a loss, so we can look for maybe one more attempt. We see something. A lot of indecisive candles. I don't want to deal with any of these kind of small bodied candles. You know, if we have a change of state like above this right here, I'd look for it. But I really want to see like larger bodied candles, not like all this indecision up, down, up, down. Want to see like a better change of state. Now we could potentially look for one if we get something right here. And then more recently, I would say these two candles are probably good enough. Right here, we'll take the best one we can get. If we get a closure above this, then I will, okay. So we can look for a retest of this change in state. We might not get it. It might just take off without us. Let's see if we can catch a second attempt right here. Place order, entry trigger 1, second attempt. Let's see what we get. Just got tapped in, 10 minutes. So that was really cool. We, like I said, you want to avoid all of these small-bodied and indecisive candles. Really want to like wait for confirmation of that change in state from a couple candles that are like together. Let's look at any of these three levels. I think would be great change of states. And so we had one loss and win, and overall pretty good on the day. So I did some testing on this earlier, so we'll look at kind of both what I was able to get just now with us, as well as kind of some period earlier. I think I got like 15 to 20 ARM testing like a month or so. But overall, like pretty happy with this. We're seeing about a 58% win rates using a 1.75R. Like I said at the beginning, I was going for like 1.52R on those CISD reversals. But looking at the risk reward simulator, we'll just go ahead and jump into that right now. If we look at entry trigger 1, I'm curious what it kind of so a little higher win rate, 60%. Interesting. So it's saying 1R might be optimal for this. We saw the same with the oil exchanges strategy. I was initially using like 3R with like a 50% win rate, and 1R is way better. So 79% win rate, 80% of your trades being wins. Looks like it might be better. I would definitely encourage you guys to get larger sample size with this. But that might be the move. I was looking at 1.5 hour earlier, but based on this new data, it looks like 1R might be the same. Let's look at the entry trigger 2, the continuations. So a little lower win rate with these, still profitable. We were going for 2Rs on these. That's probably why the win rate's a little lower. So let's see what it suggests for these. Okay, interesting. So the continuations, I think you have a couple options here. So this is a nice, again, a little flexibility with the risk reward simulator. So the highest win rate is still that 1R. So if you're someone that really wants to prioritize a high win rate, the losses really eat into your psychology, you can still get a pretty high profit factor with a 1R if you want to just use that for everything. However, it does seem like the best and most optimal for these continuations when you're using the kind of fair value gap test is holding out for 4R. So another option you could do is take some partials at 1R and go break even at that point, and then let the rest run, and maybe 4R is kind of where you take the rest. That could be another great way to apply like the logic of this risk reward simulator. So at least like you take some off the table at 1R. That could be another good way to do it. But yeah, it's interesting. Kind of look at these. For each different trade trigger you have, it's good to filter those in the analytics so you can see what the insights are between them. So I'm going to go back to just kind of everything overall, and we'll take a look at the rest of the analytics. I'm going to filter on New York time zone so we can kind of see everything based on when we were testing. So like I said, overall, we had 58%, 1.75R. It looks like we could potentially have a much higher win rate if we look for those 1R base hits on the CISD reversals, and maybe even for the continuations as well. We had 4 wins in a row, 3 losses in a row. Looks like sells were actually a little more higher win rate. Just in the periods we tested. Obviously, we were only trading New York session. And then this is kind of where I was showing you guys. It looks like you might be able to just trade like the first hour and a half of, I was stopping after a single win or a couple losses, but the bulk of these profits are coming in the first 2 hours. So save yourself from more chart time. And you could test more if you want, but I think it's similar to the unicorn model. Unicorn model is much better at or near market open. So same thing with this. It might be best to only trade it kind of the first 2 hours and then just hop off the charts after that. Win rate by day, looks like, again, you'd want a higher sample size to really make any decisions, but for some reason Tuesdays, Thursdays, and Fridays were a little lower. Wednesdays and Mondays crushed. So again, after you get bigger sample sizes, that could give you some information on not trading certain days, de-risking on certain days, or increasing risk. If you have a 90% win rate on one day, you might want to increase your risk that day. And then overall, we had I only tested like 1 week in March, but from the period I tested, we got about 16R, or sorry, what's my math? About 15R in about the month that I tested from 2022, and pretty similar in 2024. I think it tested about a month, and we got actually almost 20R in that period. So it definitely seems like something you can get some good returns on. And if you optimize further with the risk reward simulator, you might not have quite as much profitability, but you'll have less periods of drawdown. So it's kind of the trade-off there. But yeah, I hope you guys enjoyed this strategy. It's been a fun one for me to test. Turtle Soup's a hilarious strategy name, so it's kind of a fun one to play around with. But if you guys have any other strategies that you want me to check out, definitely feel free to share in the description. It'll be in the recording for this. If you guys have anything else you want to test, if you want to hop in the Discord and talk with other people that are testing it, feel free. But yeah, I hope you guys enjoyed this, and I'll catch you later. See you, everyone. Bye.